Hello, everybody. Hope you're having a nice Friday night. Hope you had a nice week. If you're invested in the big tech stocks, you've done all right. Frankly, well, not even frankly, but in reality, most of the market's been going down. We just had a rebound today in financials and healthcare. S&P's getting close to what's probably going to be resistance, but you can check that over in our SPY video. I just want to talk about this advanced auto parts as a possible trade idea. Now, I'm not giving you a recommendation, but I just want you to know the way that someone like me, someone who was literally in the institutional trading world for more than 2 decades, looks at stocks. I hate to, whatever, promote myself, but my marketing people are like, oh, you got to promote yourself, you got to promote yourself. Well, whatever. I don't want to make fun of their voices. Anyway, let's just look at this advanced auto parts. The best traders don't have preconceived ideas in a perfect world. Of course, no one's perfect, but they come in to work every day with kind of an agnostic attitude and they tell themselves, what will the market tell me what to do? Now, advanced auto parts isn't really on my radar screen, although I know when I've needed when I had a broken taillight a few years ago, I went down to, it was either advanced auto parts or AutoZone. I don't remember, but regardless. Anyway, we're going to look at the stock because this thing has made a historic move. Historic, okay? As traders, when we think about historic moves, when we think about things that have never happened before, that's when we got to pay attention because this is the market just telling us, hey, man, come on, I'm doing something historic. There's going to be a move here that you can trade off of. If something is in equilibrium, if there's the same amount of buyers and sellers, it's not going to move. We want stuff that is out of equilibrium. There's more supply than demand. There's more demand than supply. In this case, let's check it out because this is a historic thing going on here. All right, first of all, it's down 40% in 3 days. I mean, that's not that historic. Stocks can make moves like that, but usually it's a biotech stock, a tech stock. For a company like Advanced Auto Parts to do something like that, that's kind of unusual. It's kind of, so that in itself puts it on my radar screen. All right, let's go on to the next chart here. All right, now we're talking about history. If you look at the bottom part of this chart, we have what we call the relative strength index. This is an index that measures momentum, or what's what we call an oscillator. It measures momentum. What is momentum? Momentum is a measurement of how far something has moved in price from time period A to time period B. If something gets above the what would be its typical or historical trading range, we call that overbought. If something gets below what would be its typical or historical trading range, we call that oversold. Now, the vast majority of time, something is going to be trading within what would be its typical or historical range. If we get to an extreme above or below that, this is an important thing to understand. This will draw buyers or sellers into the market. They're going to be looking for a reversion back to the mean. A lot of trading strategies and systems on Wall Street are based on this concept of reversion to the mean. So this down here measures, it's one way to measure momentum, right? How far something is below what would be its typical or historical trading range. If the blue line gets below this red line, it's called oversold. Now, if you look here, we're very oversold. As a matter of fact, this chart doesn't go back all the way, but Advanced Auto Parts has been trading for 20 some odd years. Based on this measurement, this is the most oversold this stock has ever been in its history. So we are talking about a historic, I don't want to say anomaly, but a historic event. I don't even know what the word is. But as a trader, when I hear like, oh man, this thing is historic, making history, it's time to pay attention. Now, maybe it keeps going lower, maybe it goes to 20, but we're going to just watch this for a possible rebound. Now, I'm going to show you something else that is historic. This is the volume, and for some reason, I could get this chart to go all the way back to when this company went public. So this was 20 years ago. 2 days ago, or was it yesterday? I don't even remember. The most volume that is ever traded in the history of this stock traded, okay, 2 days ago, was like 40 million shares. This thing averages, I don't know, 3, 4 million shares a day. This could be the sign of a capitulation. All right. What is a capitulation? A capitulation is when traders basically throw the baby out with the bathwater. There are traders who are trying to sell. Let's pretend we're in the institutional world and you're some big shot former hedge fund trader. Everyone loves to be like former hedge fund trader. And yes, I am a former hedge fund trader. Blah, blah, blah. Yay, me. Anyway, pretend you got a million shares to sell and you sell 100,000 at 200. And you tell yourself, okay, sold 100,000, I leave 900. I'm going to wait for it to get back up to 200. I'm going to sell some more. But it just keeps going lower. And it's like, all right, I better sell some more. Okay, I'm going to sell another 100,000 at, say, 180. Then I'm going to wait for it to come back up. It doesn't come back up. Now you're starting to get aggravated. You sell another 100,000, let's just say 150. Okay, I'm going to wait for the rest. I'm going to wait to sell the rest until the price comes back up. The price just keeps going down and down and down. Finally, you just say to yourself, all right, I'm out of this. Enough of this. I'm done. I'm going to throw in the towel. I'm going to call my broker and just be like, dude, just sell my damn stock. I don't care. Make it go away. Just get rid of it. Don't tell me. I don't want to know. I don't want to know what the price was. Just sell it. So as a result, you get these massive spikes in volume. And this is the capitulation. Now, this is where there could be a trading idea here, because say this thing starts to rebound. Say some investors out there do some research and they think to themselves, these numbers were bad, but they're not as bad as everyone thought. This was an overreaction. I'm going to go in and buy. Well, when the buyers enter the market, guess what? They have a hard time finding sellers. The sellers are blown out. They're done. They threw the shares out. They threw the baby out with the baby out with the bathwater. They threw in the towel. So when the buyers come into the market and they want to buy, they're going to have a hard time finding sellers. So in order to get a seller off of the sidelines or to entice a seller back into the market, guess what? They're going to have to be willing to pay a premium. So the stock closed at 67.50. Well, someone might say, hey, man, I'll sell you 100,000 shares, but guess what? I'm going to sell them to you at 69. Take it or leave it. I'm the lowest price in town. Next person might say, okay, well, hey, trade at 69. I'm going to sell them to you at 70. So forth and so on. And this dearth of sellers, or this lack of sellers, causes the buyers to have to pay a premium. And this is what can move the price higher. So a lot of times when we get these capitulations, these huge spikes in volume, the stock is about to rebound. And I'm not, I don't know where this thing is going to be in a year or 2 years. I'm just saying, as a trader, this sets up an opportunity where we can get a bounce here. Okay, and we can make some money in the short term. As traders, we look for things that look like they're on the verge of an imminent move, meaning in the next couple days, maybe a week or two, something's really oversold, something has a capitulation volume, so a good chance we bounce here. Now, it's a good chance. Is it a guarantee? Of course not. How do you know when to get into this? Now, this is the same stock, but just a 2 month chart. Well, we think that there's a chance there's going to be a rebound. We think there's a good chance. However, it's not a guarantee. This thing could keep going lower. It could be the next Bed Bath & Beyond, although I don't think it's going to be that bad. I mean, Bed Bath & Beyond went from 30 to 8 cents in, gosh, not even a year. It's incredible. I've been on Wall Street for 30 years, and that's one of the most amazing things I've ever seen. But anyway, one of the ways an institutional trader reviews something is, okay, there's going to be price levels out there that are more important than others. And at these certain price levels, there's going to be a lot of support or a lot of resistance. Sometimes we know why there's an important level, sometimes we don't. So a potential idea here would be, okay, 68 was where we closed yesterday, pretty much, not exactly, but right around that. It's where we opened today. There's a good chance there's going to be a lot of resistance around 68, because we're going to have people that sold, or I'm sorry, let me take that back. We're going to have people that bought that are upset the price is lower, and they're going to want to get out at break even. They want to sell, they think they made a mistake, they bought shares at 68. If they can get out and break even, they're going to do so. So there's a good chance there's kind of a wall of sellers there. If we can get above that, there's a good chance that this reversal that we're talking about is underway, and that'll give us some conviction. So to sum it up, Advanced Auto down 40% is whatever the news reported that bad. Who the hell knows? I'm not a fundamental analyst. As a technical trader, the most oversold this stock has been in the history of it, 20 some odd years. Okay, volume, greatest volume that's ever traded in the history of this stock was a couple days ago. This means the sellers could have thrown in the towel. If buyers come back into the market, there's no one to buy the shares from unless they pay a premium, and this could force an uptrend. All right, thank you, everybody. Let's just check it out. We'll see what happens. We let the market tell us what to do, and I hope to see you soon. Thank you.